So if you guys want to learn how to trade options, purchase my ebook located at wordly41.gumroad.com. And basically, how did I make $182 with 91 cents trading Google put options? So looking at Google at 12:26. So on the 30-minute time chart, 12:26. Okay, so basically this candle right here at 12:26. So this candle right here, I got into Google put options as soon as it approached the 9-day moving average, and then that very same candle, seconds later, I bought two more call options, and then my last two call options, I'm sorry if I said call options, my last two put options was at 12:29, that very same candle. And then at 12:44, I bought my last two put options on Google. So 12:44 would be, let's see, this candle right here. So basically what I aimed for this candle to do was to reach the previous high of this previous candle, the 12:30 candle in which I bought Google put options. I was like, okay, the previous high was 160.11. So I'm just going to wait and see if it can reach that number, 160. It doesn't even have to be 160.11, and it can just be, straight up the number 160. Ignore the cents. And so when it reached 160, I was like, okay, basically now my position, instead of being down almost 5%, now my position is now down close to 3 or 4%. So once I started seeing more downwards momentum from that very same candle at 12:50, I sold out. 12:50, I sold out that candle. Once I started seeing downwards momentum, and then I sold out the position for $182.91, and basically that's how much I made trading Google put options. So it's just like I told everyone yesterday. Basically what you want to do is, as soon as you feel like, let's say you're feeling confident playing put options on Google, right? And you're saying, oh, well, I'm going to play put options on Google because the previous candles are pretty much having trouble breaking over the 9-day moving average or the 180-day moving average, right? And so you see that trend, right? Basically what you want to do is you kind of want to play the trend. So basically step one, right? Buy a little small portion, not like a big portion, right? Try to test the water, see if you're correct, right, in this trade, and basically buy a small position of put options, right, as soon as it approaches the 9-day moving average. Now let's say it goes above the 9-day moving average, right? What would be the next step? So for me, honestly, the next step would be just to patiently wait and see if it can get somewhat close to the previous highs, which was, let's say it got to 160.34. Basically this candle, right, the 12:30 candle, got close to 160. Well, it reached 160.11, right? I'm just going to ignore the cents. I just want to, I want Google to approach that previous number of 160. That was the previous high. So what I would do, I would just patiently wait, see if this candle can break above the 9-day moving average, see if it can either approach the 50-day moving average or if it can approach that previous high of 160. Once either of those two options occur, right, I'll buy a couple of more, Google put options. That way my position, instead of being down either 10%, it can be reduced to being down now 5%. And then let's say that position, or not that position, but let's say Google starts going down even more throughout the day, right? Basically my position will be in the green a lot more faster in a way. So basically try to, in a way, start with a small position. Try not to use up all your cash. Try to keep it on the side And basically, once you start seeing some rejections by the moving averages or by certain, resistance levels, then you can, put more cash, or I guess you could say buy more put options. That way, when the position, not when the position, but when the stock starts going down even more, right? Your position will be in the green a lot more faster in a way. So basically what you're trying to do is you're trying to dollar cost average with options. Usually that's more so used when you're like investing for the long term with stocks, but this is more so of a strategy I discovered with trying it out with options. And basically I was just kind of like in a way like trying to experiment a new strategy that could help me out. Let's say I don't know, it basically kind of helps you minimize your losses in a way. So let's say for whatever reason Google starts going up even more and more, and it approaches the 180-day moving average and breaks over it, right? And basically I'm just dollar cost averaging along the way, right? Basically what, and I see that it, the trade is over the 180-day moving average and Google starts going up and up and up more. Basically my max loss that I want my position to be down by is at least being down by most, either down 10 or 20%. Usually that's my max loss that I want to take on a position. I do not want to take a bigger loss than those 2 percentages that I just mentioned. The reason is because usually if that does occur, right, it starts, if I'm playing put option and, that particular stock starts going over the moving averages and starts breaking over resistance levels, I'll basically try to exit out the position once I feel like, okay, this position, or I guess this trade is not going my way. I'll basically sell out the position for a small 10 or 20% loss, and basically I'll just move on to the next trade. Basically I don't want to I guess you could say I don't want to wait and see what's going to happen and see if I'm right or wrong. I'd rather just move on to the next trade, double my win rate of what I want to make. So instead of making a 10% gain for the next trade, I want to aim for either 15 or 20% gain for the next trade. And yeah, that's basically what I try to do. Hopefully you guys understood, and basically that's how this Google trade went today. So that's pretty much it. I'll keep you guys updated. I'll see you guys in the next video. If you want to learn how to trade options, purchase my ebook located at wordly41.gumroad.com. As always, this is not financial advice. As always, take care. Bye.